Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 9th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. Right now, a two-day narrow range developing here as we head into the RTH Open. This narrow range, 41% of average here, just 35 points, increasing in range at the moment as price pushes above the previous session's high. We do have NFP report prior to the RTH Open Friday morning, so tomorrow morning, 1 hour prior to the RTH Open, we're going to get the NFP data. Until then, do we remain in a two-day narrow range? Do we continue to compress here ahead of that release of data? As of right now, to test prices above the previous session's high, which was a range-bound day, the primary idea right now would be watching for price at the previous session's high and see if there's any rejections that occur at or above this level. If so, it could be a fade back to the previous session's low, brief outside day down, and perhaps we finish within range. So again, looking at a two-day narrow range continue to develop here as we head into NFP Friday morning. Still a downward bias, still a big rejection off of the previous month's midpoint, so a downward bias still in play. Even if we bounce right now above the previous highs as we are, we could see a trap and reverse still play out. Alright, let's take a look here at the NQ. The NQ right now also with the two-day narrow range developing. Obviously still super early as the day continues to get underway here, but a two-day narrow range, a little bit of a compression here just overall. You can see again 52% of ADR right here, and we are currently just above the previous session's high. So again, above the previous session's high could provide a short-term reaction, a fade that could take us back to the previous session's low. That could be a bearish outside day, especially intraday, even if we don't finish that way. So right now, still developing sideways to down ahead of Friday's NFP report. One thing to keep in mind here, we've been trending down, clear lower highs ever since, and trying to stay below at the moment the previous quarter's high. So again, if there's a reaction here, a failure, we could be looking at the next primary move taking us down toward 11.6, 11.5, and perhaps even lower, back to break even on the year or to the lows of the year. So again, big time compression here building up. We'll see what it brings with NFP up ahead. If we take a look here at crude oil right now up 0.7% and still trading near the center of the range overall between 77 and 78. Price turned down very strongly off the 80.5 level. That's the previous year's close price. So far that price and prices above it have been heavily rejected. Price turning back down. We're still within this lower range here, 72 on the low end, and we're kind of 5 points off that zone. So if we were to see a drop here, it could be another rotation back up. At some point, you got to think we're going to get an expansion from this range, and if so, it could be a significant move given that this has been about 4 months in the making of development. So it could be a tremendous trending move once we start to get directional conviction out of this range. Let's take a look now at gold futures. Gold here up about 0.6%, a little bit of a pullback here after yesterday's range-bound day. Range-bound with a downward bias. Lower high here, bearish. Mod Pima crossover sell signal here as this thing continues to trend down. Two-day narrow range, again with a downward bias. 1830 has been super significant the last 2 years. It's been the previous year's close price 2 years running. And you can see how price has reacted around that level so far to begin the year. At the moment, the last 2 days, it's been resistance after pushing through it on Tuesday. So again, compression here, downward bias, hanging on barely to this level. But if we give up at 1830, as we mentioned before, the next key level down will be the previous quarter's midpoint. That's about 1730 here. So that could be the next key level down below for gold. If we take a look at the YM, right now inside day at the moment, not above the previous session's highs yet. Very narrow two-day range, 48% of average, and a clear downward bias. This one, as we've noted before, it has a super large compression here at these highs, and it's now looking very rounded as well. So rounded top could be developing, and this is about the zone here where if we start to fail, it really opens up some downward expansion here that could be seen down back to the previous pivot lows, and that's going to take us back toward the lows of the year, the previous year. So if this pattern plays out to the downside, you're looking at these pivot lows being tested. That's 28.5 up ahead. So that could be significant in the case of downward expansion. Again, barely hanging on to this zone, and we haven't broken yet, which means we may continue to dance before some sort of reactionary move occurs finally. So continue to watch this area of support very closely. 32.5, 32.6, right in that zone for the YM. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.